Coming to you live from our studio in Atlanta, Georgia, this is the A1 Trading Daily Show. Whether markets are rising or falling, we're here to keep you up to date with the latest market news. Join us as we trade currencies, commodities, and indices live, Monday through Friday.
Good afternoon, everybody, and welcome back to another live stream. A big one for you today as we jump into quite possibly one of the biggest events of the month. I'm here joined with the one and only James. What is going on? What's today all about? Why are we so late to streaming today? What's going on?
Nothing much. Looking forward to seeing this FOMC meetings minutes report here, seeing what kind of impact it has on the markets. That, of course, was not the only news that we had today. We had a little bit of news over in the UK earlier today, way early this morning, because over here on the East Coast, these time zones get us a little skewed. But way early in the morning, the UK released their new CPI report. Inflation did drop, but not quite as low as expected. You can see right here that previously their inflation rate was at 10.1%, expected to drop all the way down to 8.2%. Missed that by just a little bit. The actual interest rate release was 8.7%. So other than that, not a whole lot of other news going on today. But yeah, FOMC meeting minutes is the one that we've had circled on the calendar. We've been talking about it for the past 2 days. This is probably going to be a pretty big event with some volatility to go along with it, happening here in just over 30 minutes. So yeah, excited to see what else is going on with the FOMC meeting minutes happening in just a little bit.
Yeah, absolutely, James. And thanks for that rundown. Yes, to your point, UK inflation came out hotter than expected. That's a whole nother, video and story we could get into. Of course, on top of that, we have Chris Pulver joining us for the second half of today's stream. It should be a very good show for everybody here. Look at this market heat map, James. What's going on here? What's moving today?
So taking a look at the indices, that's what I want to take a look at first. We can look at our U.S. indices up top here. The US 30, the SP500, and the NAS100 are all in the red. In fact, all of our global indices are in the red here about midway through the day. US 30 down 0.78%, the S&P 500 down 0.87%, and the NASDAQ down almost 1% down 0.92% there. Taking a look at some of our positive movers of the day, no U.S. pairs except for USD CAD way down here. Euro NZD being our biggest mover to the upside so far today. It's up a massive 2.24%. So Euro NZD flying high today. But again, if we're going to talk about US dollar pairs ahead of this FOMC event, just USD CAD and USD JPY seem to be making moves to the upside. USD CHF here as well. But we can also see some things selling off here. Bitcoin being the biggest sell-off of the day so far, down nearly 4%. It's down over 3.5% there. And then a few others following it. Lots of New Zealand dollar pairs, NZD USD, NZD CHF, NZD JPY, and NZD CAD all selling off pretty hard today. So we've got a lot of movement in both directions. We got some pairs that are way up today, some pairs that are way low. But again, depending on what is released in this FOMC report, all of this could be reversed. We could see just a completely different market by the time that this report is finished.
Yeah, and James, so one thing to add in terms of, we covered this a little bit on the Market Insights podcast today. James, you were, of course, there on the producer side. We talked a little bit about the RBNZ, the central bank in New Zealand, signaling that further rate hikes are not on the table. And seeing that slowing economy, of course, the New Zealand dollar itself sold off in response to that, as again, interest rates driving higher tends to be a positive thing for the currency, which is exactly why we're here, guys. Today, we are, of course, getting ready for the Fed meeting minutes, which will come out. Now, we're going to be jumping into some charts to see what the reaction is to all of that. James, thank you, as always, for the rundown on what's been going on. And guys, if you're enjoying the stream and you're appreciating James here, do me a quick favor, smash the thumbs up button, but also just get a quick thanks, James, in the chat for that. And James, thank you for being here. As always, we'll see you back in just a bit.
Yes, I appreciate being on as always. Thank you.
All right. So, guys, a couple things in terms of the reaction to all of this. Let me get my screen shared here. I apologize for that on the back end. So here is my screen. So a couple things to think about here today. Where we're at. Well, the Federal Reserve is talking about, they're making decisions going forward as to whether or not the plan is to rate hike further or pause from here. Why does that matter? Well, currencies trade off of interest rates at a very, very high rate. There's a strong correlation to when Fed forecasts are further rate hikes up, the dollar tends to trade higher. But what we've seen is somewhat of the opposite. And again, all eyes turn to the dollar here recently with the debt ceiling concerns rising. And then also, the question as to whether or not the Federal Reserve plans to continue rate hikes or not. I personally am in the camp. And again, I'm not here to predict the future. I am not here to tell you, oh, gold is going to do this in the next 30 minutes or, this or that. I'm not here to do that. I'm here, however, to talk about both case scenarios and what I will actually be looking to do myself in either case. And when I mean case, what I mean is meeting minutes come out and let's say things are very hawkish, meaning Fed is looking to raise rates and still keep going, or Fed, has plans to still stay on a tightening route, even if it means taking a break. Those things lean towards more dollar upside and continuing this upward trend. However, on the flip side, if things come out, if we get meeting minutes that allude more to a softening Fed, meaning we want to pause and we think that the economy is going to slow and show signs of helping us out in this inflation problem. Again, Fed is trying to get that inflation problem under control. That is where we're at. Now, James mentioned some cool things here on the EDGEFINDER. We looked at the market heat map. I also want to show you, as we go into an event like this, sometimes it can be very useful to look where the big money is positioned. Now, I'm not talking about trying to predict based on what price action is doing as to what I think smart money is doing. What we are talking about right now, what you see on your screen, is institutional positioning at a factual level, not on a speculative level. What I mean by that is the CFTC's Commitment of Traders report shows you where institutional money is positioned, whether it's on the long or short side of key assets like the US dollar, the gold market, the SP 500, the Japanese yen. This is data that we've pulled into our software so that we can take a look. And I think as we go into a meeting like this, it can add some clarity to understand where that big money is positioned. Currently, we're going to focus here for a second on the US dollar, where institutional money is still fairly bullish. There is a preference here to the bullish side. But on the same token, we have oil and gold, which are even further on the buy side in terms of position ratio. Again, we take what we do with this software is we take in all the contracts that we can absorb from the COT data. And we say, where is the dollar on this? And so, for example, if we're looking at USD, we have 20,669 long contracts open, 11,155. So we've pulled this data in and we can see right now there's a preference on the long side for institutional traders as we go into today's meeting minutes. Gold, similar story though, 255,000 long contracts. Sure, there has been a decrease recently. You could see that in our data here as well. So that'll be something interesting. And I do want to also pause and say, guys, that we are doing for today's stream, for the next hour, we're going to be handing out trials to our software. So if you guys want to use this today, if you want to take a look at the EDGEFINDER for yourself today and try it out, there's going to be a link in the chat being dropped right now. If you guys would like to check out our software for free, here it is. Click this link, send us a direct message on our website, and just ask to try out the EDGEFINDER, and someone from our team is going to hook you up with a copy so that you can play around with the COT data, retail sentiment, seasonal trends, the market heat map that James was showing us earlier, so on and so forth. So where am I with this? Well, gold continues to be one that I'm interested in. However, I've got to see some I've got to see some strength come into this market. Here's your 4-hour chart, which sold off after tagging 1980. And the question is now, where are we going with this meeting minutes? If we get something that is, of course, dovish from the Fed, or even just, hey, we're going to pause rate hikes for a while, and we think that, the rest of the work will be done by a slowing economy in terms of the inflation story, the gold market could rally. And what I'm looking at personally is, let's see if we can take out these previous highs. If we take out those previous highs in the coming days, I'll be looking for pullback opportunities on the gold market. It's a ways away, but again, with a meeting minutes event like this, it can suddenly be snapped into position. I'm personally not interested in shorting gold. However, for those of you guys who are more just purely price action traders, what I would pay attention to would be this 1956 level. It's been a stubborn area for bulls to keep control. If price does break underneath those lows, it could trigger further selling. In that case, I don't have any trade open going into this position or going into this event on gold. So I am not positioned. I'm not trading right before the news or anything like that. I have some swing trades open, but for the most part, when it comes to gold, I am waiting to see what happens and mostly only interested in a breakout to the upside if we get it in the coming days. So that's my positioning on gold and something that I will be looking to trade if something forms here. Another trade I want to go over is oil. So oil, if it pulls back here and it snapped down to an area I was watching, I am actually looking to get long on oil, but it's going to also have to be in reaction to what we get here today from the meeting minutes. If we get, and there's a lot of stories here to cover around gold at this time. There's some stuff going on with the Saudis where they, have been trying to push price a certain way as well. So you have several forces at play here when it comes to the oil market, the Saudis, but also the Fed and where they're at with monetary policy, as well as global economic growth or decline. Things like China, these things have heavy impact when it comes to the oil market, the energy market as a whole. So for me personally, I am bullish. I think we broke out very nicely. For those of you watching oil with me, a pullback into the 72.50 area, or I'm sorry, 72.60, 72.80. I'm looking to get long if I can. However, I will wait when it comes to this news event. I'm not going to trade any immediate spikes. I'm going to watch to see how price forms, see what the news is. We're going to digest it here together on the stream as we always do. And I want to invite you guys. We've got 642 people in here. Do me a quick favor in the chat right now. What are you guys watching the most going into this meeting minutes? And the reason I ask you to do that is because I will try and take a look at whatever you guys put in the chat, whoever, spam, whatever you're looking at, so that I can take a look at it here leading up to the event. In just a moment, we will also have a guest speaker coming on to the stream to join me for the meeting minutes, Chris Pulver, a fundamental and technical trader like myself. Chris is a great guy, and I look forward to his commentary joining us on the show here today. If you guys enjoy the A1 Trading Show, also remember, hit that like button, support the stream, help us out. We are doing our very best here to bring trading coverage and bringing voices from all over the trading space to join us here on this show. So take half a second, smash that thumbs up button if you're enjoying the stream, and we will see you guys here throughout the entire event as we are not going anywhere. We're going to stick around for the event itself. The stream will be covering both before and after the news. Yeah. I like the stream. Thanks, Lisa. Thanks to everybody who's liking the stream. You guys are running that like button up. I can see it. That is amazing. I really appreciate it. Yeah. So I'm watching gold. I'm also watching the NASDAQ. Someone said NASDAQ in the chat. It's a chart that I'm watching myself. And I'll be completely honest with you guys. I'm long NASDAQ at this area here. I'm looking at this and I'm saying, I understand the risk going into an event like this, that it is possible that my trade could end up stopping out on an event like this. And I've made it clear that I think, and again, I'm not here to predict, but I'm leaning towards, if I had to pick a side, I think that the commentary from the Fed could lean more towards the pause narrative. And if that occurs, a wait and see kind of narrative comes into play. I think that it does okay to help the NASDAQ out a little bit here after its recent decline. Now, some people might argue against me, say that, this AI run up is overdone and that, you're going to be regretting picking up here, but it's a momentum trade for me. And I've got my stop in place. I know what to do if I'm wrong about this trade, and, we'll see from there where it goes. On today's news, I do have plans. Also, I'll be transparent with this. If my trade stops out, I do have plans to try again on the NASDAQ at a deeper retracement. So I mentioned my friend Chris Pulver is going to be joining us here on the stream. I see him in the backstage. Chris, give me a thumbs up if you're ready. I'll bring you in. All right, cool. We'll bring Chris in. I'll say hello to Mr. Chris Pulver. How are you, sir?
I'm doing well. Thanks for having me, Nick. Nice to see everybody.
Yes, I'm glad you're here. Glad to talk markets with you as always. And for those of you guys who are not familiar with Chris Pulver, Chris has been doing live shows. He's been in the educational world for a long time, and he's a very established trader. Chris, how long have you been trading?
Over 20 years now. Stocks since 2000, Forex since 2007, options, cryptos 2015, 16. Little dabble in futures for a couple of years. So been there, done that, you know?
Yeah, absolutely. You've been all over the place. I have never really been a big options trader, but I sold my first option here today, actually.
Okay.
That's the most boring. It's the most boring options trade you're ever going to hear.
Hit me with it.
I sold 3 contract, and I don't know what I'm talking about. So this is literally me learning. I sold 3 contracts, three options puts on silver SLV at $20 strike price, literally in June 30th. It's the most boring options trade ever. But I just wanted to try collecting premium, how that works, and I really don't care if I buy silver at 20. So just
you're on
little.
That is a great start. And I will say this: if you want some quick education, I will happily send you some recordings. I do this stuff every day, Monday through Friday, in a trading room. So if you want just like, here's a great credit spread strategy. Here's, I don't like to do a lot of naked stuff because of the margin. But SLV at $20, I'm sure you collected something decent for it out to June. I like to trade a lot. I would not.
Yeah, it was
SLV.
Yeah, no, it's a super boring trade, and on purpose. It has that low quote, right? $21 a share. So I was able to kind of play around and not take too much risk, and just more just understand the idea of collecting premium. But again, not my area of expertise. Chris, of all the places that you've traded, what's your favorite thing to trade? Do you have a favorite?
Honestly, options has been moving the needle a lot for me the last few years. It's been a really not aggressive way. It's been a nice variety to add to, just instead of buy and hold, right? You can be way more active with lowering cost basis, increasing profit potential, repairing trades that would normally be a loss. Options are a fantastic layer to add to your equities trading. So it makes you a way more dynamic trader in the stock market. Trading options is way less capital intensive. So as an example, I'll throw a couple of trades out there. I did a long call, which usually is not my forte. I don't love to just pay for time and pay a debit essentially. But Beyond Meat, protein alternative that originally SPAC'd at like $50 a share. It's down to like $10, $11 a share. So I just bought a $10 call out to January of 2024. If there's any squeeze potential on that, I paid like $1.50 for that long call. My max risk is $1.50. If the thing spikes up to $15, $20, I'll get $8 to $10 a contract. If it goes up to crazy amounts, it's just the profit potential is pretty amazing. I did another one on BITO. That's a ProShares ETF that follows Bitcoin. I went out to 2025 on this one. I'm giving Bitcoin all the room in the world to see if we can actually break 31K, run up to new highs. I think we talked about this week privately. But, if Bitcoin ever goes back up to 70 grand or goes to 100 grand on spot or speculation, BITO should reflect that and probably be a $60+ stock. I bought the long call at 15. So lots of upside potential for low risk.
Yeah, I think Bitcoin's an interesting chart that we could talk about, kind of the ultimate risk on, risk off kind of play, if you will. If we do tend to see markets rebound and optimism perhaps in the economy or anything like that, Bitcoin could run. And also, there's that slight kind of concept with the inflation story, hyperinflation. It's kind of like a weird tail end risk where if the economy does well, gold, silver, Bitcoin, they can chug along with it. But then also if there's that other extreme where, the Fed prints money into oblivion, then also there's that gold story for sure, but possibly that slight tail end where maybe Bitcoin comes in as inflation. That's a whole, we could probably spend an hour just on that alone. We are a little pressed for time. Chris, I want to talk about some markets here as we get going into the meeting minutes here today. Where are you at? What's the what are you watching here today? What's your take going into? What are you looking out for possible trades or ideas on any markets you'd like to talk about?
Sure. So one thing that I'm watching that covers a lot is just looking at the DXY. I've been long the dollar the last probably month, and the last few weeks it's really started to play out nicely. Got limited out overnight on the Aussie dollar, New Zealand dollar. I'm short the euro dollar from the recent highs at 110. I'm long dollar Singapore, which is kind of a off the beaten path one, but that one's doing really well. Mm-hmm. Dollar index to me is kind of the story that ties into what the Fed's doing. I think that the Fed is going to get as much free mileage out of jawboning this pause, because what's going to be really dumb, Nick, would be right now we're seeing a change in July's Fed Watch. If you look at the Fed Watch tool from the CME, right now the market is anticipating a 46% chance that the Fed's going to raise rates in July. And then turn around in November and cut rates. It's like that would be the dumbest monetary policy that we've had this crazy 14-month cycle to tighten. Now we're talking about the pause. The market's trying to get excited about a pause. And then the Fed's like, we're not done yet, but we're going to cut like by the end of the year. And so either the market's going to be sorely disappointed because the Fed will raise rates and continue to pause, or today's minutes will just express tightening credit conditions, bank situation, uncertainty, debt ceiling, all these things that are literally at the forefront right now. If they pause, they're just going to get as much free mileage out of the contraction, out of the bearish sentiment, out of the hawkishness. Like they'll pause and just hold it through the rest of the year. That's what I think would get the inflation data down. I think that kind of brings everything down. That kind of hurts the consumer. That just contraction remains if they just pause and they don't give any inclination that they want to cut. The market wants them to cut so badly. Tech has been in a melt up because of this anticipation. And I also, interestingly enough, like the sentiment side of things, people are so scared and people are so bearish, and the media is pressing this recession stuff and the debt ceiling until they're blue in the face. And it's like, it's just hurting morale. Nobody wants to be investing. It's crazy. It's like, I am so ready to just have these big runs somewhere. We're going to find them. And so the DXY explains a lot to me, because I think there's some risk off flows that are going to continue to persist through the summer trading perhaps. But if we raise the debt ceiling, if we temporarily raise the debt ceiling, it's still going to be to the tune of $1 trillion to $1.5 trillion. I don't know how that's good for the dollar index. I don't know how that's good for the dollar. Maybe that bodes well for stocks and other assets. You talked about Bitcoin. If you look at gold, Bitcoin, the dollar, and SPY, you put those four together in a line chart, you'll see a really strong correlation for the last 10 years. As far as like dollar movement,
very interesting.
How those other ones are actually playing out with risk appetite.
Yeah, and I think you mentioned there the dollar, and I think a lot of people who are here in the audience, we've got over 900 people. And by the way, everybody, thank you for being here. We appreciate you. We're going into the meeting minutes. We've got a great show here planned for you. We're going to be giving commentary both before and after. The dollar here trading above price resistance here, and this is regardless of how what technical analysis book you flipped open, this looks really strong, right? A breakout above previous resistance like this that was given price action a lot of trouble here is a really strong move. Now, I'm actually not very bullish on the dollar myself at this time. Despite that, though, I have not been bearish either, because like I said, from a technical analysis perspective, this is a tough chart for me to try and fade. I've been looking for dollar weakness to come in, because I think that, to your point there, Chris, with the equities potential run that could come, it's going to require some softening from the Fed, as well as this debt ceiling situation thing to blow past us, I think, right? Yeah. So what I'm thinking is that today with meeting minutes, to your point there, there's this guidance where it's like, hey, we need to keep raising rates, but at the same time, they're wanting to pause and reaching the end of their, so there's this kind of conflicting point in Fed outlook. And today I think we possibly could get some more clear guidance, because time is running out, right? If they're trying to play in 2023 here, try to play out their plan, they've got to make some decisions here. Either you're going to tighten and we're going to keep pushing this inflation thing hard, or you're going to pause, because perhaps the Fed may pause because they're thinking that the economy is showing necessary signs of slowing, and could cause, the economy itself could cool this inflation problem without the need for more rate hikes. And which is personally, if I've voiced it before, we'll see if I'm right or wrong. That's where I think the Fed will go. We'll see, like I said, if I'm right or wrong about that. I am positioned long in the NASDAQ. I mentioned that just before you stepped on, Chris. And I have a stop in place just below the low of today so far. If that gets broken out, I'll be stopped out and possibly looking for another attempt at a lower point. But the dollar right now, though, it's a freight train to the upside, and it's really hard to justify get short here until I think you start seeing some break of that structure. But for now, I'm not betting on that happening. And I think you mentioned you've been long some dollar pairs or some been long dollar. Yeah, dollar strength, and you've been on that right side of that trade. So that's awesome. And again, I think that based on, it sounds like you're kind of in the same boat where we're just kind of waiting to see what happens with monetary policy. And for me, that will mean it will justify how I trade for the next week or so, like which direction, or whether maybe I just don't take a lot of trades, depending on what is said, hawkish or more on the pause side. So you mentioned gold there and Bitcoin, some correlations between the two. We're about 5 minutes out here from when the meeting minutes drop. Tell us a little bit about like where are you at with like gold and oil, silver, Bitcoin? You mentioned some of those charts. Where are you at with these as we go into the event?
Yeah. So again, I mean, what's nice is just looking at the analysis on the dollar index. I mean, I've been short gold since that 2060 high. I mean, I was ideally looking for something at 2070, at 2075, getting short on gold, getting short GLD, and then waiting for buy levels. I mean, I like gold to scoop it up back around 1840. I like gold back down certainly at 1700. We're in a 2-year range on gold, and I could see an unraveling. I like silver right now. I mean, I read this yesterday. The gold silver ratio is 83 times in price. Historically speaking, back into the 90s, that's a pretty good spot to notice that equities tend to rally on extremes like that. I mean, you go back to like Gulf Wars, financial crisis, COVID, you get like the 90 to like 100 times gold to silver ratio. We're at 83 right now. So from a historical standpoint, gold to silver ratio is pretty high. And technically, I will say this, if we're going to go long gold above 2100, there's room to run for a long ways, like 2400 gold, but that would be a very deliberate play against the dollar. That's dollar weakness for a long, long time, and gold and hedging and inflation and all these things, just like gold's the play. Bitcoin could probably pick up a little love from that as well, but I could see gold certainly coming back into that range, midpoint around 1850 to 1875. And then see where the fight lies. You know, if it comes all the way back down to 1700, I'll scoop up gold all day long. If silver, I mean, if you get filled and own some shares of SLV at $20, I mean, my cost basis right now through options, I've worked my cost basis down to below $17 on SLV, and I want to get all the way at 26. So I'm still going to hang on to it. I'm still bullish on silver longer term, and try to turn it for $9 or $10 a share. That's one of my bigger positions right now in my portfolio. So yeah, I mean, I think gold, silver, oil, Bitcoin, the indices, everything literally hinges on the dollar right now. That's my opinion.
Yeah, and I think your point about trading gold to the downside, I haven't been participating, but I have. I'll fill you in where I've been at. I took a trade on the long side of gold when we had a lot of momentum surrounding some of the bank failures. Right, that story, I was eating that up, and I caught some gold movement to the upside. And if I'm being honest, I thought we were actually going to be able to break and perhaps do that move that you were talking about, getting up to test those all-time highs and perhaps even, flirt with getting above into the 2100s, but didn't quite happen. I made some money. I trailed some stops on this trade. But then, what happened is I tried to enter that same level as we continued to consolidate, and price rolled over and I stopped out. However, when I stopped out, I didn't, I was able to get out of the way of the bigger slip to the downside, which was always nice, just reading charts, going with a key level like that, dropping my stop just below underneath so that I could avoid some of the carnage. Since then, I haven't been participating. And I've mentioned, to your point, I think that, for gold to rally back to the highs, you need a serious catalyst. Every time that gold heads back to the all-time highs, you have something like Russia invading Ukraine, or 2020 concerns about, printing press going crazy, right? You have these fears that come into the market that really get us back to highs. So until something surfaces, or at the very least, until we get a technical breakout. I've mentioned here on the stream that a break above 1980 could be interesting for perhaps a start of a move back higher, just reading the chart. But again, that's wishful thinking. And the way that I trade, I'm not necessarily going to place a trade off of what I think it could possibly do. I'm going to wait for it to show me signs that it's making that move. And to be fair, guys, and we do have the breaking news. Sorry about that. We're going to be jumping into the meeting minutes here in just a moment. Let me see if I can pull something up here in just a moment. Let's go Forex Factory, see if we can find it there. Yeah, to that point, Chris, watching to see basically what the chart does. If it breaks these lows, it could very quickly make a run back down to further lows. Initial reactions here. You seen anything move off the bat? Of course, it takes a minute.
I'm still watching. I'm looking for Financial Juice real-time news. I'm looking at the numbers on the SPYs. Here we have participants noted concerns. Getting a lot of red stuff here. Federal debt limit may not be raised in a timely manner, threatening significant financial system disruptions, tighter financial conditions. So that's Fed. You know, we've had Fed speakers all week, which is classic Fed timing, right? Where it's like we have FOMC minutes today. We've had Fed speakers all week long. They're just saying the same thing. They're pretty much towing party lines, saying we're going to pause. You know, market conditions and economical geopolitical conditions will kind of dictate what we do. But I'd say right now they're pretty comfortable with 0% to 5.25% in 14 months is pretty aggressive. I don't know. I mean, historically, other than Paul Volcker crushing the market in the 80s, I don't know what other tightening cycle we've had that's been this extreme. So I think a pause is in order. It's honestly, I don't know if you watch the CME watch tool as much as I do. I mean, every single day I'm checking out my trading rooms. It has been ridiculous. The changes you've seen on a daily and weekly basis. Like I said, I mean, right now the forecast is the Fed is expecting to raise rates in July by another 25 bips. And then if we cut in November, December, like the market's anticipating, or that the watch tool is anticipating, I just feel like that's the dumbest monetary policy I can imagine. Why would you raise rates another 25 basis points to just squeeze out everything, every last drip of these raises, and then just go back into cutting because the market's going to crash? Something like, you know, it's just, I don't think the Fed's going to do that. I mean, it's been hard enough to navigate everything since 2020. And certainly their job isn't easy, but at the same time, I don't think we need to get into the mess and the murk of just doing something desperate. It's like, if they want to tame inflation, keep job owning. And that's what they do. They get, it's called moral suasion, right? You get all this free mileage out of job owning. They were the last major central bank to raise rates, but they had the most anticipated movement globally. You had all these central banks that raised rates ahead of the Fed in 2021 and 2022, right? 2022 was our start of the rate hike cycle. There were 3 or 4 months prior to the Fed raising in March 2022, other central banks stepped up, started raising rates. The Fed was the last one to raise rates. Now we hit a pause, and we're probably just going to hold. And like New Zealand raised rates last night, 25 basis points. The ECB, the Bank of England, still going to raise rates to tame inflation. So a lot of central bank action right now. And the Fed, I think, is just going to stand still and say, look, all this crazy stuff is going on. We'll monitor. It'll be data dependent. We'll see what conditions lie. But I think raising again would be a big shock to the market at this point.
Right.
Sorry,
and I just want to. No, you're good. You've got great information. I was just trying to keep tabs on everything moving. Some people in the audience are saying nothing happened. Guys, here's the way meeting minutes, if you're newer to this stuff, meeting minutes is a report. It's basically like if you would have a company meeting or something and somebody were to take notes and then drop those notes on your desk. It takes the market some time to read through it, and it's not so jarring as something like NFP, where you get jobs numbers dropped on somebody all of a sudden. So meeting minutes are not an immediate reaction. It is more a sort of a document that is key to what the Fed's guidance is looking like. Of course, if you guys have anything, please feel free to drop that in the chat, share with the community. If you see something of notable interest on the meeting minutes, please feel free to share. We're watching. I'm trying to keep a tab on the what has happened with the markets, as sometimes as the story unfolds, we see some volatility. Of course, dollar still holding its ground well above that resistance around 103.6. But yeah, I mean, Chris, I'm generally with you in terms of the forward guidance, it would be very, very weird to see, hey, we're going to raise suddenly in front of a debt ceiling concerns, banking concerns, and then just turn around very shortly after and start cutting. I think that
Correct.
actually could invoke some more panic, and the Fed is very well aware of that. So I think that it's an interesting spot that we're at, and that debt ceiling. I mentioned earlier, I was on a podcast. I think that one thing about these meeting minutes, of course, they'll be useful and they'll be important, but the debt ceiling continues to be a really headline story that's going to kind of cloud the vision of what's going on
Yep.
with this stuff until further notice. So yeah, if you guys are enjoying the stream, make sure to hit the thumbs up button. And also, Chris has his own YouTube channel. We just got it dropped in the chat for you guys. If you'd like to subscribe to Chris, very knowledgeable dude. He's been trading for 20 plus years here and all sorts of different markets. So if you guys are enjoying Chris's commentary as well as my own, make sure to subscribe to both channels. So let's see what else. Pound trading lower here, staying just off the bottom here as we get going here. And then of course also Euro getting pretty beat up here, trading back underneath or just shy of underneath this support zone.
Yep.
Yeah, against the dollar.
Yeah, dollar's on top of the food chain today.
It certainly is. So which currency pair specifically were you looking at again, Chris?
So I'm currently short euro dollar. I got limited out overnight with the New Zealand dollar drop on that rate decision news, the Aussie dollar drop. We had some channels that we're looking at in my trading room. We got limited out for like 150 and 185 pips on those two trades. Our dollar yen limited out around 139 that hit today. That was like a 350 pip trade or something like that. So we had some pretty good trades, just trading some dollar strength, getting some love, protecting profits. And yeah, I mean, I'm going to check on dollar sing right now. That's been one that, that's a little bit more expensive to trade. But I like those institutional kind of, not exotics, but like, I lived in Singapore for a while. I got the feel for the exchange rate from 130 to 140. That's a pretty big one. So I was long going into that 130, 130.50 low. It's all the way up to 135 right now. And I'm trying to trade it back essentially to the midpoint. If you can bring that chart up, yeah, you've got it perfect there, Nick. 137.50 is a yearly pivot. That's a perfect halfway point. And then 138.50 is a big supply. It's a big supply level and big inefficiency. I'm liking to see if it'll fill.
Yeah, the Singapore dollar, very interesting. I actually had a trade quite a while back on when there was something going on with the Singaporean stock market was having just a falling out back in 2020, I believe. And that was I haven't traded it very much since. It's a pair I don't usually trade. Not that I have anything against it. I just stick to the majors. But yeah, that's quite the move here, continues to push higher. And one thing I do like about this pair is that it does tend to trend very well. It seems like it gives you a nice, once it gets going, it just goes and goes and goes. So yeah. And then you also mentioned Euro USD. One thing I think for those of you guys who are watching EU here today, if we're able to break through this low, what it may do is it may, from a technical perspective, may lead to further sell pressure coming into this market as perhaps the breakout traders get a hold of it and look to trade this thing lower. Do you have a target on this Euro trade, Chris?
Anything below 106. Anything below 106, I'm putting trailing stop losses on. We sold this back up around 109. And yeah, I'm anything below 106, 105.50, I'm locking in profits using trailing stop losses.
Very nice. Very nice. I'm curious. I'm going to take a look and see what's going on with my Euro Yen trade. I took one this morning. Yeah, here we go.
Okay.
So Euro Yen, picked up Euro Yen on a pullback, not necessarily super correlated to the news, which is part of the reason why I liked it. Sure, the Yen and Euro both will be somewhat impacted by sudden guidance, but not necessarily as impacted on things like the debt ceiling, so on and so forth. Picked this one up long earlier this morning, just off a pullback to this support zone. So far, it's looking okay. I've got my stop loss in place. For me personally, watching the euro against the Japanese yen, if we're able to break through these highs, that's going to be where I'm looking to try and trail a stop on this and lock something in on that trade. It's a really small trade. I took it especially small ahead of big news like this, just because the market can be all over the place. And just to take a look here across the board, at the COT data as we watch some of these charts, you've got the Japanese yen, which is continues to be one of the more heavy sells in terms of institutional positioning. You can see we've got all the futures contracts pulled in here from the non-commercials, which is the hedge funds and large speculators in the market. They're very short on the Japanese yen as of the most recent filing. And on the flip side, they've got some positions long on the US dollar. Seems like they've got some interest in the euro. The pound for those currency traders is pretty mixed. You got 54, 40, 50, 46, really not a too much of a preference there. So kind of interesting to keep tabs on that. And for me personally with this euro on that one, this one is just a pretty clean price action chart for me. I like that pullback to support. And what a mover there today. I wish all my trades looked like this, Chris. Wouldn't that be nice?
Yeah, that'd be great. That's a great buy too, by the way. Did you get that right in around 149?
I did. I got it
Nice.
149.078 right at this support zone, and it kicked right off that level this morning. So
Perfect.
in a good spot there.
Yeah, great
so
entry.
let's see. I'm going to take a look around at some more charts here. What's going on with gold? Gold still hasn't moved too much. Is there anything you're seeing move off of this, Chris? It seems like kind of a quiet reaction.
Yeah, I'm keeping an eye on the ETF. So we're getting a little bit of a fade lower. So the SPY retesting some lows, perhaps. We went from like 0.8, 0.85 to the downside. Now we're back up to 0.8. So, I'm looking at the hour close. Usually with FOMC, even the rate decision in the press conference, that 2 to 3 o'clock candle taking us into the latter half of the day, 2 to 4. How's the market close today? Obviously there's some big gaps the last couple of days, right? SPY gap lower, push lower, Q's gap lower, push lower. There's momentum to the downside. I think that if we close red today or we close at fresh lows, so full disclosure, I have a trade today. I did some leveling in. I did a little a long put on Tesla for some short-term levels with the weekly expiration trading options. I'm looking at the 177.50 put, the 175 put, and hopefully for the 80 cents to $1.10 I took on those contracts, I can look at having like maybe a $3 to $5 credit if they fulfill. So I'm looking at some. I think we talked about this is also offline, but kind of the 0 days to expiration stuff and some of those gamma squeezes. There's some really big levels on the downside on Tesla. That again, I mean, I know the risk. I'm willing to take it. If we come back and retest today's lows at 178 or hit that 177.50. I will be out with some really nice profit today. So I'm looking to see if we're just fading that gap on Tesla and then heading lower. So the indices, if the SPY creeps up to that 1% to the downside for the day, if the Qs creep up to 1% downside for the day, I think we're going to hit some fresh lows on a lot of these stocks that opened up. So I was looking more bearish this morning to see if there's follow through. I didn't anticipate the Fed meeting lifting the markets up. I don't think the Fed's going to say anything the market wants to hear right now. Debt ceiling's front and center. The Fed's not going to come out and counteract that, in my opinion. So I think they're just going to keep everybody saying, look, it's a pause cycle. We have concerns. There's bank concerns. There's debt ceiling concerns, blah, blah, blah,
Yeah, and we've got some, thank you to the producers for putting this up. They grabbed us a little bit of highlight notes here. Fed minutes, Fed staff continue to forecast mild recession starting later this year, followed by a modestly paced recovery. Fed minutes, several participants said if the economy evolved along lines of their outlooks, further policy firming might not be needed. Fed minutes, participants generally agreed that the extent to which further interest rate hikes may be appropriate had become less certain. So it sounds like from those 3 points there that we're getting kind of a softening tone across the board. Now, this is, of course, starkly different. If you're reading just, if you read headlines from several months ago, it was just, we remain insistent on getting our inflation mandate under control. And it was just, this regimented stormtrooper approach. Now you have kind of the opposite extreme where it's kind of like a backpedaling of what was said there. So an interesting, like you said, several things in front and center with the markets as we go forward. You've got the debt ceiling concerns, you've got banking concerns, credit concerns. These things are going to likely turn the boat, I think, or assist in turning the boat for the Fed going forward. So it's an interesting time. And of course, the S&P trading lower. It seems like basically everything must have come out. The things that are coming out were right on with what the market was kind of expecting. So that's why we're not seeing, for those of you guys who are wondering why we're not seeing big spikes, this is kind of why, right? The market's forecast seems to be spot on for the time being. Again, indices trading lower, gold just off the lows. And Part of my question there, Chris, too, is on the gold side. We just mentioned like 5 different seriously market concerning things. So concerning, in fact, that perhaps they mean the Fed needs to possibly, there's that possibility of rate cuts sooner than expected. And rate cuts sooner than expected usually are not just for fun. They're usually because something might have been broken, right? And so usually in that situation, I would imagine that could potentially be a bullish catalyst for gold. Would you agree? Like a sudden rate cut or an urgency on that front could cause a push up on gold, or do you think that it would not be the case?
Well, I think for the we talk about this big catalyst for gold. I think the big catalyst is going to be more so how much more dollars are going into circulation. Is it $1 trillion? Is it $1.5 trillion? Is Congress going to actually get the job done and extend the government out to May or March of 2024? Or is this going to be like, you know what, we need more time. Let's kick this down 30 days. So, I mean, gold to me is a dollar related play at this time. The Fed raising rates, not raising rates, I don't see that really moving gold as much so as just the debt ceiling if we're going to print more. So that's my play right now. I mean, if you bring up the DXY again, I mean, we're looking at some good 4-hour chop on your chart there. If you bring up the DXY again, so initially I just had a horizontal level. If you can scroll out or zoom out a little bit, Nick, there's some really good resistance right around 105.50. But because we recently made a higher low, I have kind of this angled channel where I could see us getting up to like 106, 105.50 to 106, peaking out there on the dollar index and then looking for a bigger sell on the dollar. So I don't think the dollar comes out of any of this over the next 6 to 12 months stronger. I think near term, the dollar can be stronger for safe haven. One thing that's interesting is right now, bonds, strongest yield, fixed income, United States is like reigning supreme right now with the highest yields. Dollar index at 5.25. Outside of the New Zealand dollar right now in the central bank, I mean, it's the best carry trade in the market. So at least for the uncertainty, if you're going to park money and let it sit somewhere, the U.S. and the dollar is a pretty good spot to sit in the near term.
Yeah, that's a good point too. When it comes to the currencies, especially, where are you going against? And one thing, for example, you mentioned the carry trade, especially things like the dollar yen has historically been that notable carry trade opportunity. And if you're not familiar with carry trade, what we're referring to is if you guys have ever seen swaps on your account, debited or credited to your account, we're referring to the differences in interest rates offered by central banks around the world. You've got the Bank of Japan, you got the Bank of England, Bank of everything, right? So different banks offer different interest rates. The divergence between the two can actually be collected in the form of a swap. And so that dollar yen continues to push higher and be an interesting one. You've also got another popular one is like the dollar Swiss franc. So on and so forth. So it seems like, again, like we were saying, overall consensus around a pause seems to be in order. Seems like what the market ordered was correct. And we'll continue to monitor some of those things that we talked about, breakouts either way on gold or, Chris mentioned his Euro USD short, which talking about trailing a stop at some point here on this one. We'll see if the Euro can get a breakout here underneath. That will be very interesting. And Chris, I just want to say a big thank you for coming on the show as always.
Absolutely.
Genuinely, and I mean this, Chris, I think that of all the guests that I've had on the show, you're up there top 3 in terms of somebody who can, go the full way with me. And in fact, even more knowledgeable than myself to have on the show. So I always appreciate people that know something that I don't. And maybe after this, you can give me some mentorship on options, because I definitely need it.
Let's have a crash course, Nick. I think you'll like it, man. You'll love it.
Yeah, absolutely. Well, Chris, thank you for joining. And guys, also, we're going to drop the link one more time to go check out Chris's channel. He does shows throughout the week. And if there was anybody I'd ever want you to go watch instead of me, go watch Chris. He's got great content. And Chris, thank you for coming on.
Thanks, Nick. Thanks, everybody.
All right. And guys, yes, make sure to go shower Chris with some love. Again, great guy. I always appreciate having him on the show. And, the thing is, when it comes to this stuff on the social media side, it's hard to find people to come on the show that are as knowledgeable as Chris on the fundamental side. Everybody wants to talk charts, and of course, that's great. We love charts. We talk charts all the time on the stream, but having that fundamental knowledge and understanding, I think, is what makes the news stream so effective for us here on the A1 show. We're here trying to give coverage and understanding as to why markets are moving the way they're moving, not just, hey, the price action looks like this. You can get that anywhere. We're trying to give you the story of the market and what may be heading next for, for your trading. So anyways, Euro, I want to follow up a little bit on some of the things that were said, right? The Euro at support here. Can we break underneath? That's going to be impacted by whether or not the dollar stays strong here. And again, I think what takes precedence in the market right now is the debt ceiling situation. Where am I at? Well, I've got a couple things I want to follow back on, see if there's some trade setups. I'm still looking at this oil move. If we can get a pullback on oil, I'm looking to get long. For those of you who are inside of our Discord channel, I will be looking for an opportunity to get long oil. Again, I took a trade. I made some profit on oil earlier this week, went ahead and closed out on my oil trade before the news here today. And I'm looking to get back in if I possibly can on oil. The NASDAQ trade that I have it's not going too hot. It's kind of just flat right now. It hasn't made much of a move. Honestly, I expected a little bit more volatility today, but I'm not too worried. I am a swing trader, so I'm not looking for instant gratification or anything like that on the day trading side of things. I am really just trying to hold this trade to see if we can capture a push back up, perhaps, pausing narrative, as long as it doesn't turn into, economic bigger recession narrative. I think that the NAS still looks like an opportunity to go long. We'll see if that plays right. I also do want to say, guys, we mentioned a lot of things here on the stream. We've been going a mile a minute with all this stuff. We talked about COT data. We talked about the market heat map earlier on. If you guys want to check out our software, we are a software company out of Atlanta, Georgia. That is the reason we're able to do these shows, is thanks to our sponsors, as well as our software that we do, of course, sell to traders. That's how we're able to pay for all the stuff that you guys see on these live shows. And if you guys would like to check out our software, we would appreciate it. We'd love to give you a chance to try it. Right now, during this show, we are going to be trialing or giving out trials to anybody who comes to our website and asks for one. So we're doing this right now. So click this link. This is going to take you to where you can request a free trial from my team, who is in the office right now, handing out trials to a select number of people. So if you guys would like to check out our software for yourself, play around with the market heat map, our economic scans, so on and so forth, then I encourage you to do so. Click this link that's in the chat right now, and you can feel free to grab that wall. We're live here. We've got people, like I said, ready to give you access to that. I want to talk also in terms of forecasts, right? Markets are forward looking, and we discussed with Chris all sorts of things about where the market, where the Fed sees things going. And I wanted to follow up on that with our Fed tracker here. So this is kind of a look as to, in the future, where funds rates are headed or expected to head in the future. So it does seem like right now we are at a point where the market is expecting no further rate hikes this year. That seems to be the forecast. And then perhaps going into next year, that's where consensus seems to be a little bit more on the rate cut side. Now, when I talked about earlier than expected rate cuts being concerning for the markets, talking about pushing back these rate cuts sooner and sooner, if that were to happen, it would probably be not for a good reason. It would probably be for a concerning reason, meaning the Fed is like, hey, we don't want a serious recession. We need to cut these things now because we might have overshot in our basis point rate hikes. I mean, Chris made a great point. He talked about the fact that we have raised in the past year record speeds in terms of interest rates, raising by 500 plus basis points in just over a year. It's been an incredible speed that the Fed has done that. And so I think that there is this argument where we need to pause and watch to see what the data brings in and let it kind of sit there. The question then will be, are we going to stay higher for longer, or are we going to start cutting, and how fast are we going to cut? That's, of course, we'll be here hopefully years into the future, continuing to give you guys coverage on this going forward. But that's what we'll be paying attention to in terms of Fed rate future cuts or holds or whatever, right? Let's take a look also at the position that I've got on Euro JPY. We did reach this level of resistance around 149.86. I shared this inside of the Discord channel. Let me show you what that trade looks like here in just a second. Let me pull that up for you. So right here. So I entered this morning and this thing just jumped off of support. So I went long euro yen at 149.078 with a stop on my trade just below market structure. Here's the screenshot that I shared, and it just jumped. I mean, right away, held support very nicely. It had all the things that I was looking for on the edge finder side of things. I'll show you guys what that looks like here, by the way. I'll pull up the edge finder on the minor currency pairs. We'll go Euro JPY here. And where I'm at with this going forward, I continue to hold on to this position. This is one that I am in myself right now. And don't plan on closing until it shows me signs that I need to do so, right? And I'll talk about that on the technical side just a quick second. I want to go over what the edge finder pointed out. So in terms of score, we get a +4. The higher the score, the more bullish the edge finder is. The lower the score, the more bearish the edge finder is. On the COT data side of things, what we have is that the euro has a pretty hefty long position ratio in isolation in terms of futures contracts. On the Japanese yen, we get the opposite effect. The Japanese yen showing 76% short ratio for futures contracts. So what we see here is that there's this divergence where institutional money is long euro, short yen. And I liked that in terms of what I was looking for on the long side. Specifically, also, retail is doing the opposite, guys. So retail traders are short the euro and long the yen. It seems quite interesting that institutional money is doing the exact opposite here as to what the retail traders are doing, almost to a T. So on top of that, you've got seasonal trends to the upside here in the month of May. We see a significant bias to the upside for this currency pair. Of course, we've only got about 6 days or so left of the month of May. But again, I'm already long and that trade is in profit. So we'll see if that can persist. Seasonal trends add confluence to the trade. We have a trend reading to the upside. Interest rates attractive in the European area. Of course, interest rate related products attract foreign investment, and the higher the interest rate set by the central bank, that generally attracts more outside investment. For example, U.S., as Chris was pointing out earlier, that carry trade, U.S. bonds, it attracts foreign investment into the currency. As of course, if you want to buy U.S. equities or U.S. bonds, what do you do? What do you buy them in? You buy them in U.S. dollars, right? So it does create a demand for the currency. Regardless, when we look at the euro against Japanese yen, it's a currency pair I'm long on, and I'm looking for a break above previous structure in order to start really trailing stops on this position that I've got. I'm floating around $378. This is a really small trade for me, but I took it very small because I knew that Fed meeting minutes were coming out today, and you just never know quite the volatility that you're going to get with an event like this. So yeah, there it goes. I've got that trade open. If you guys, like I said, we are giving out trials to the Edge Finder here today while we are on the show. If you guys want access to the Edge Finder to try it out for yourself, here's how you can get it. We've got the link in the description. The producers just put this together for you. If you guys want the trial while we're on air here, someone is in the office to give you a copy of the Edge Finder tryout for yourself, whether you're wanting to look at the individual currency pairs page, if you want to look at what smart money is buying and selling, if you want to use the retail sentiment indicator, all of those tools are available to you within the Edge Finder. So yeah, I'm long euro yen. I've been looking at things like gold on the long side, as we were talking about with Chris. Same thing with US oil. You know, if we can get a pullback on oil, I'm kind of interested there, especially with this, mild recession and also the idea of a, no further rate hikes are expected. I like oil to the long side, and we'll see if that technical chart can come into play. And that's a trade that I am looking at. Let's take a look at that NAS100 trade. Where are we at with it? Still just basically flat on my position, probably slightly in the red here at this point. And we'll see if this level can hold. If we do break through the lows, I'll look to re-enter at a later point. So yeah, we're going to watch that. Real quick, guys, we're going to take a quick break. We're going to hear from one of our sponsors. We've got a quick commercial break. We'll come right back and talk about what is next in the markets and looking forward to the rest of this week, where we do have a huge report coming out on Friday for PCE numbers. Check out the commercial break. We'll be right back.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading cost, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free,
Click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
And there you go, guys. A quick thing on what you just saw there. We are partnered up with 8cap. They are a supporter and sponsor of today's live stream. The A1 Trading Show could not exist without our sponsors to financially support what we do here. And I do want to also say that if you guys are familiar with like the offers that like AT&T, Verizon, probably Vodafone and all the other different places around the world, I'm not too sure. Apple has partnerships and Samsung and all these devices. What these companies will do, the providers, the service providers, they'll buy you a phone when you switch to their service. 8cap has the same sort of relationship with us with our software. So I mentioned we're a software company. If you like our data and you want access to this stuff for free, that mention that James made is actually available to you guys if you switch to 8cap. It's a free thing to do, and you get access to the software for free upon doing that. If you want more information, like James was saying in that video, click that link that's in the chat right now and connect with a support rep who can help you get free access to the tool for life if you switch over to 8cap. Again, all that information can be found by chatting with one of our support reps here at A1 Trading. Yeah, so quite the move here. I want to mention also that, you know, Friday we have another big event. We have numbers coming out on Friday, core PCE, which could be market moving for sure, as it is the Fed's preferred way of looking at inflation. The core PCE price index is one that the Fed focuses very heavily on. And of course, that's all the rave right now, as the Fed wants to see that inflation cool, but it also wants to avoid turmoil with these debt ceiling situations and paying back debts and all that stuff, right? That is also a serious a concern of the Fed. So we have a couple things here on the docket. It seems like that is an increasing concern of the Fed compared to just for a while it was purely the inflation story. Now the story is creeping up that they don't want to break anything, and so maybe there's some dovishness in our in the books. So we'll have to watch closely to that, guys. We will be live for this event, and we'll be live for pretty much all major news events going forward. That's what we do here. So if you guys enjoyed this show, a tremendous amount of work goes into these streams, not just by myself, but my whole team. We put together guests and show hosts and fun events, and we're here early some days to put on these shows. If you appreciate what we do here, it's free for you to be here. We just ask you to do one thing: hit that thumbs up button, and we'll see you guys back tomorrow. Thanks for tuning in. Catch you later.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And if you create a new trading account with 8cap, you can get tools like the EDGEFINDER completely for free. Check the link in the description for more information. From all of us at A1 Trading, have a great day, and we'll see you next time.